Hello everyone, welcome to Trade. Today we're going to be seeing the entire analysis on the budget day, how we can trade, what is going to happen if we trade, and we are going to try and dissect the last three budgets, what happened, the entry close, if we had taken any trade based on option selling and option buying, what you do would have been profitable and safe. We are going to dissect that for all the three budgets, that is the first of 2020, 21 and 22. Okay, so this is what we're going to see in this video. It might be a lengthy video, so please do watch the video until the end. It'll be quite informative, I'm sure. And just to highlight this point, this video is not to encourage anybody to trade on the budget day. This is more of an information to give you and show you what happens if somebody is not aware of it on the budget day. If we trade, what can happen. We're going to see that in the past three budgets. Okay, so the first date we are going to choose is the 1st Feb 2020, where what happened on the budget day. Let's look at that. This would be our first date that we're going to check. So on the chart in Banknifty, I'm going to take the example of Banknifty. We are going to go to, we have an option here, just go to, and you can put in the date. So let's go to 2020 1st Feb and see what happened on this budget day. And if everybody remembers, those who trade, this budget day was on a Saturday. The 1st Feb fell on a Saturday and the market was open on a Saturday. And this is the price action on a 15-minute chart for the 1st Feb 2022. Sorry. So this is the price action. Now, what if we had done over here, whether we would have been profitable, we're going to see that. See, firstly, what happened, the price opened, we had an up move, then usually the time is around 11:15 to 11:30 when the budget is done, and then once the budget was completed, the market had a nice sharp fall on the downside, right? So obviously after that the market went up, but this is only on the budget day. What is going to happen, we are going to see. Okay, so now what I'm going to do is I'm going to take the help of CPR to see how we could have taken our trades. So this is the historical CPR available for the 1st Feb, and you can see that when the market went up, we did take some sort of a resistance at the CPR and had a nice slip on the downside. Now to get this view on the budget day, see, now we are doing an back check, right? Like we are doing a pre-study, so it's kind of easy to know that okay, the market fell, we can see the trades on the put side, but in the live market, to analyze whether this is going to fall from here, it would have been very difficult. Why? One, though we rejected the CPR, okay, we rejected the CPR, we came down. Just see these two candles, how volatile that was, right? The movement was about 200 points, and especially in this candle, even if somebody had shorted right over here on this candle, okay, if somebody had got a perfect entry and shorted, the price was at 30,800. If we had shorted here, a candle like this would have shaken out anybody, unless people have very huge capital to trade with, right? So a candle like this, a 300-point move, definitely we would have seen some loss in our option buying or option selling, whatever we had done. So now we are going to see if we had taken a trade right over here at this strike price, that is 30,800. If we had sold option or bought option, what would have been our state until the end of day, right? We're going to see that now. For that, I'm going to pull up the historical data from the NSE website. This is, I'm not making this up, this is from the NSE website. You can go back in time and check any day the option prices, the open, close and stuff. So first, since we would have had a view of the market reversing from here because the market rejected the CPR, say assume we went ahead and decided to buy 30,800 PE. Okay, so I'm going to mark that over here. We're going to see 30,800 800 P for option buying. Okay, so if we had taken 30,800 P, see 30,800 P on that particular budget day, 1st Feb 2022, opened at 599, made a high of 1044 and made a low of 430 and finally had a close of 1064. So when would have been the low at this high point of the time, right? So we wouldn't have been able to capture at this point. Probably when we enter over here, roughly the price, obviously we cannot get the exact price. So if the low was 430 and the open was 570, say this premium would have been somewhere close to 500. So roughly let's consider the put premium was at 500. Okay, and then what happened, we stayed the entire day with, see, if anybody does enter like this, right, on a very volatile day on this, after getting a nice big red candle, our stop loss will have to be the high of this candle, right? Not even one candle went higher. So if we had stayed in this trade and the low point, and obviously we won't be able to catch this low point, maybe we would have exited after this 1 or 2 or 3 of this kind of a green candle, and or maybe we would have exited even right here when after this big fall, and then we saw this candle immediately. Definitely our state of mind would have forced us to exit here, right? So now just assume that we had all the levels marked and somebody decided to hold the trade until, say, what do we say, 3 o'clock, the end of the day. Then the close price on 1st Feb for 30,300 P, the close price ended up being 1064, right? So I'm going to put that close price here, 1064. So what is the difference for this is 1064 minus 500. We are getting a difference of 564. Now this into one lot, that is 25, would have given us a, this into 25 for one lot, okay, would have given us a profit of 14,100, right? So this would have been the profit if we had taken the perfect trade. Now whether we would have got this perfect entry and the perfect trade, yeah, that is a different story. Maybe not everybody can, but if somebody had got this perfect entry, yeah, this would have been the profit. Now just say we assumed we exited the trade after this big green candle, right? So I don't think the premium would have been 1000. It would have been somewhere close to, say, we entered at about 500 and the premium would have just gone up about 200 or 300 points, because the difference itself is 560, right? Around half of it, say about 250 points. That is in case if we had entered right here on this particular green candle, if we had exited a trade after shorting at the top, right? So the difference would have been around 200 and maybe the profit would have been about 5,000. Okay, now how many of us could have shorted right here? That is depends on one's ability to analyze in the live market, right? Even on a volatile day. So this is one example if we had taken a perfect entry. Now the point is we might not get that perfect entry with all the analysis that we do. Maybe we will enter somewhere here on this candle, or we will enter somewhere in this candle. But this video is all about analyzing what would have happened if we had taken that perfect entry and to see the movement. Now to be on a safer side, now say assume somebody decided to buy 38,800 call here and 38,000 put here, then would you have been in profitable? We are going to check that. Okay, so now we'll see the price for 30,800 C. So I'll have to come back to this and change this to C and get the data. So 30,000, yeah, 30,800 CE opened at a high of 370, made a high of 570 and closed at 74. Okay, so if the high was 570, okay, if the high was 570, now say after this candle, if we probably try to take an entry, now what is our strategy is like a straddle. Say we bought a call here and bought a put here, right? So I'm just going to keep an average price of 450, because after this big red candle, definitely the put price of 30,800 would have reduced, because at the money over here was 30,800. So when this candle closed, we were at 30,750, right? So now just assuming that the price was, say the entry was at 450 and it closed at, the price closed by end of the day, the price closed at 74 rupees. Okay, now coming back to our Excel, the price closed at 74 rupees. Now what is the difference? That would be 450. I'm doing all the math in my calculator here as it will be easy. 74 we would have lost minus 376. Okay, now 376 into 25. Now all calculation will be done with respect to one lot. You do into 25, we are getting a minus 9,400. Okay, so if we had bought one lot put and one lot call, assuming that we got the perfect entry, now whether we can get that perfect entry or not, that is a different story, but assuming we got the perfect entry, if we had taken one lot call, one lot put, we would have made a profit of 14,000 and minus 9,000. So that overall profit will be 14,100 minus 9,400 would have given us a profit of 4,700. Okay, definitely this is slightly on the safer side, because now just assume if we had bought only the put. Okay, now just assume on this day we thought the market is going down and we bought only the put and the market shot up 1,000 points. Obviously we would have lost our capital. It would have something like this, the 500 would have become 74, right? So buying one lot call, one lot put at the right time on the budget day gave us a profit of 4,700 for one lot. Obviously all this is rough calculation. With the data available on the NSE, we won't be able to take the exact at that particular minute what was the cost. We won't be able to see that, so this is just a rough estimate. Now both these for option buying. Okay, I'm gonna put this here, option buying. So in option buying, if we had followed the strategy, buying one call it put at the high where the point of turn, we would have made 4,000. Now let's see for option selling. So in case, since we had a view that the market could fall from here, so what will you do when the market is going to fall? We will sell C, right? So that nobody will get confused, I'm going to put option selling here and option buying here. Now on the option selling, now say we went with one-way selling, like without, this is not the right way to do, especially on a pretty volatile day, selling only the one way. Say the premium was, sorry, this will be C. When the market is going to go down, you will be ready to sell C. Now you sold 450, you sold this one lot at 450, it closed at 74, and you would have made a difference, whatever this difference is, 376. So you would have made a profit of 9,400 rupees on selling one lot of C over here. That is, see, on this budget day, selling option is not advisable because the rate of change of the premium will be high and the direction of the market is also not known. So assuming that somebody could predict the top on the budget day, if you had sold this 38,000 CE, you would have made a profit of 9,400, right? And if in case you would have taken, now the other point is, somebody had a view that the market will be sideways here and they sold call and they sold put. So in such case, what would have happened if you had sold 38,000 call and 38,000 put? The put you would have sold at 500 and end of the day you would have covered it at 1,064. Over here you have a minus 1,064 minus 500 is 564. This is minus 564 into 25. So you have a loss of 14,000. So you will have a loss of 14,000, then your overall loss will be minus 14,000 so your overall loss will be the same, 4,700, but you will be on the loss side. So in case if somebody wants to trade, depending on whatever the risk management that you have, the best option would be to buy a call and buy a put. In that case, see, in option selling we would have taken loss, in option buying we made some money, assuming that we got the perfect entry, and getting that perfect entry is difficult, right? So let me just check this, if we got this right. If we bought PE 500 CE, this should have been 1,060, this should have been 74. So here you made money, you lost money. In case of option selling, you sold 450 and this closed at 74, you have a profit of 9,000. You sold at 500 and closed at 1,000, you had a profit of minus 14, and this is your overall loss. Now let us go to the next date, what happened on 1st Feb 2021. Okay, let me just add few more lines here. So let us go to Feb 1st 2021. I'm sorry. So this is this price action. Okay, we on 2021, I remember clearly, we had a nice pretty big bullish view, sorry, not bullish view, bullish move. Our view was nothing. See, this was the move. The market from a low of 30,999, almost 31,000, we shot up to 33,300. The move from the low point of the day to the high point of the day is 2,400, right? Now where we would have decided to enter after the budget speech, that would have been on this day. The budget speech probably got over at 12:45. That is where this move came on the upside. Now just assuming by 12:30 or 12:45, when the budget speech was ending, we decided to do the same thing. Okay, first we'll see the option buying example, and then we'll see the option selling example. So in option buying, obviously you can do the same exercise. What would have happened if you had bought it right at the opening? But our assumption is, when we are going to see, when probably at the end of the speech, at that time, if we do option buying and selling, whether we will be profitable or not. So this candle would have been difficult to catch because the one candle itself moved around how many points? The one candle itself moved around 1060 points. So one 15-minute candle moved 1000 points. Right now, assuming that we could, why I say assuming is definitely going to be a pretty difficult task on the budget day to spot the bottom or the high. But now, say assuming by 12:30 somebody could read into the budget speech and they thought the budget is good, we're going to go up, and bought 31,500 call. Okay, so I'm going to again come here for the 2nd Feb 2021, 31,500 call. It opened at 369 and closed at around 1070, 1700. So if it opened at 369 and made a low of 300, probably we would have got a premium again roughly around, say, 500. By the time we enter, say it was about 500. Say we entered about 500, and by the close time, we were at 1700. If we had held the trade until the end of the day, we were at 1700. So what is the difference here? 1700 minus 500, that's 1200, into 25 would have given us 30,000 for one lot. We would have been profitable with this trade. But not every time the budget moves in this type of a nice impulsive way. This was one of a budget. Feb 21st, you can do some back testing in all the February budgets. You will hardly see any budget which has moved in this fashion, where the market straight away went up without creating any kind of a big volatility, right? So this is an exception which probably will not happen every time, but we are just looking into it. Okay, now just assume somebody didn't want to buy only a call. They had a view that, they wanted to buy one call and one put, or whatever lot size. They just wanted to do a straddle of call and put, right? So we'll see if that ended up being profitable on this day. So we have the call price. Let's pull up the put, 31,500, get data. So 31,500, it opened at 850, it made a high of 943, and it closed at 63. Okay, so if it had opened at 859 and made a high of 900, where the high would have come when the market was over here, right? So at about 41,500, again the price would have been roughly around 500 or 600. We won't be able to get the exact price, so I'm just taking about 550. Okay, a premium of 550 for the put. This is 31,500 P. Obviously the premiums, depending on how the VIX is, it will be different on different budget. With whatever data available to do some back testing and create some kind of an informative video, I'm just going with the average values. So whatever the close price is exact, right? It's only the entry we won't be able to figure out the right price as of now. So we closed at about 64. Now what is the difference? Say about 550 minus 64 is equal to minus 486 into 25. So 486 into 25 would have given us a loss of 12,150. We would have had minus, so 12,000 minus 30,000. So overall we would have had a profit of 17,850. If in 2021 when we got this type of a move, say closer to the budget, if we, once the budget speech was done, if we had bought a call and a put, this would have been our profit. Obviously the profit was more because we got this nice one-way move on the upside. Right, now the same thing we'll see if what would have happened if we had sold options. Now just assume on this particular day somebody expected the market to be sideways. Obviously there will be no budget where the market will be sideways. The overall move will be sideways, but at that particular instance the market will not remain in a range. But for our analysis, say we ended up selling one lot call and selling one lot put. You're selling one lot put and you're selling one lot call. So let's see what will happen. In option selling, now first you would have sold 31,500 C, that is this. It closed at 17, so you will have a loss of 30,000. Okay, now the second strike price, you will sell the put at 550 and it would have closed at 64. You would have made a profit of 12,000. So the overall profit or loss will be minus 17,000, right? We lost 30,000 and we made 12,150. So the overall loss is 17,850. Now if you had sold only the put and not the call, we would have been in profit. But on this day, to determine whether the market, whether we can take only the put and get a one direction view, it's obviously very difficult on the budget day, because this day a lot of the technicals don't work, but it is only the news based move that comes. But if you go back and test, right, this is the secret of CPR. Even on a budget day, the CPR gets respected beautifully. I'm going to talk about that at the end of the video, so just stay tuned. Maybe not everybody would like this type of a calculation, but this is just for the information, just to see if what we do on the budget day we will be profitable or in loss, assuming we get some good entries. This is the last year's budget, that is 1st Feb 2022. Let us go to 2022. 1st Feb 2022, and let us see what happened in the budget. See, this is the price action for the last year's budget at 2022. So what happened last year? 80% of the budget moves are like this. Either you go up and come down, or you come down and go up, but overall it will be a sideways move. Now by 10:15 or 11 probably the budget got over, or I'm not sure what time the budget got over. Usually I could only assume that the budget got over because the market at this point turned. After the budget is where the market turns, right? So on this budget day, see, we went from R1 to R2 to R3, and then from R3 we reversed until S1. Even on a budget day, can you see how the CPI levels were respected? Obviously, it's not an easy day to trade, even though the CPI levels are there, especially after seeing this type of huge candles. Now, if somebody had shorted here, definitely we would have thought of exiting or booking a loss after seeing this type of a green candle. If somebody had gone long here thinking the market is going to break out, immediately you had a sell-off, right? So even though the CPI levels are respected, it is very difficult to trade on the budget days. I've traded few budget days. The budget which I was profitable was only this budget, where the 2021, where we had a one-way move. In 2022 we kind of had no loss, no profit, just like some loss. In 2021 we made some nice profit. In 2022 again nothing worked, we were in loss. Why we were in loss? We were in profit in this down move, but we failed to exit at this point, and immediately the next 15-minute candle took out all our profits. We just had to close with about 20 or 30,000 loss, like with whatever capital we had entered. So now let us see. Now at this point, if somebody could catch the stop, now this is just an video of showing at if you had got the right entry on a budget day, you will make money, obviously. And how we could have made that money, right? So assuming at this, you saw this evening star, we were at R3, budget speech was coming to an end. We decided to short over here at about 38,800. We decided to short and kept the trade until the end of the day, right? See, in all the examples we saw keeping the trade at the end of the day. So we are going to see the same thing, keeping the example until the end of the day. See, in this case, if we had shorted here, we would have been in big profit, but lost at the end of the day, right? So let us pull the data for 38,800 P. Go to Banknifty and select the year 2022. Go to 1 to the week ending 3. Obviously it would have been 3-2, and P 38,800 and select (2022) Feb. To get the same particular day, you need to choose from first to first. So did I choose 2022? Get data. Sorry, this should be 2022. Now why is this 2022 data not coming? Did we put something wrong? Why is it not taking to 2022 first? Yeah, it was by default selecting 2021. I don't know why. Okay, now 38,800 made a high of 1,200, made a low of 490, and the close price was 565. Okay, now if we had bought a put over here at 38,000 when the strike price was 38,700, the premium would have been, if the low was 490, the premium would have been around 550 or 600. Okay, so for our purpose, let's take 38,800 P, say we entered at about 550. Okay, see, in this type of a move, again, if you have the technical expertise to enter here and exit, even I could not exit. I'm not saying I'm a very good trader, but even I could not exit here because I just waited for that one more dip, expecting that just that one more dip after seeing this such a big candle, and we immediately reversed. And in this candle itself, we had to book a loss on this particular day. So now, just assuming, depending on one's technical expertise and their appetite for taking the risk on a budget day, if somebody had shorted here, they would have seen, if you had bought at 500, you would have seen the price go up until, where is the high, is 940. Okay, sorry, this is the tab. If somebody had bought at about 550, you would have seen the price go up until 1255, right? You would have doubled your money. But if you had waited for the end of the day, you would have closed with no profit, no loss, somewhere around your buying price itself, maybe with minimum loss or minimum profit. So we're going to calculate that. We bought at 550, end of the day it remained at 550, so your profit is 0. And let me remove this, nobody should get confused. So you have no profit, no loss. So, and obviously it won't be so perfect, so I'm just assuming we would have, say, about 150 points loss. So always be prepared for the worst and not expect this type of a perfect move. You enter at 540 and you closed at 540. That is not possible. Now say you lost a premium of about 150 or 200. Say we took a loss of 5,000, sorry, 150 into 25, we would have taken one lot loss of about minus 3,750. Fine. This is if we had kept close at the end of the day. Okay, but if we had closed at the low point, as you all know, if we had closed at this low point, we would have doubled our money. Sorry, this is the tab. We say if we had entered at about 500 and this went to 1250, if we just do a rough calculation for that, so 1250 minus 500 is 750 into 25. At the high point we would have seen 18,750 profit, but by the close, this is exactly what happened to us on the previous year budget session. Though we had bought a call and a put the previous day, at this high move we exited. When this move came, we didn't catch the exact top. There was a beautiful fib level rejection. It was about 70% or something. So we entered over here. Okay, at this fall we were in profit. We just waited and this candle came, the next candle came, we booked a loss. Obviously we didn't wait until the close, but we ended up in loss. But at that fall, right, see, all this calculation is being done for a purpose. We are going to come into see what is the best we can do on a budget day with some small lot size, obviously. So at this point we did see big profits. As you see, we would have seen about 18,000 or so, and then definitely if we had waited at the end of the day, we would have seen loss. But in all the previous examples, if we had waited at the end of the day, we did see some profit, right? Sorry. So the next thing we're going to see is if you bought at the same time, if we had bought meaning at this point if we decided to buy one lot call and one lot put, right? So this is 38,800 C. So we're going to make this P as C and get the data. Obviously this video is ending up being pretty long, but do watch it. It's almost at the end. Do complete it. Now at this point, if we had bought 38,800 call, say the high was 800, the low was 190, close was 280. So if the high was 820, okay, definitely the call price high means it would have been at this point. So the premium was high at this point until the budget finished, right? So say we got the premium at about 800, okay, and at the close of the day it was 280. So there's a difference of 800 minus 280 is equal to 520. So this is minus 520 into 25. So you have a loss of minus 13,000. See, in a move like this where the market went up, came down and went up, if the budget moves this way, wherever you buy at the point of turn, if you decide to buy after the speech completes, right? Let me highlight this budget dates so that we don't get confused. This is 2022. We started from the bottom at 2020. So overall, if we had not exited at the low point, if we had waited until the end of the day, we would have been in loss. Now on this day, let us see if option selling, how it would have worked. Now at this point you decided to sell 38,800 after seeing this evening star, taking some rest, and you had a bearish view, decided to sell 38,800 call, okay, and a put. So 38,800 call, if you had sold at 800, the close was 280. So this would have been a profitable trade. We would have been in a profit of 13,000. And if we had sold a put at the same time, assuming if somebody thought the market is going to be sideways, obviously that would be a wrong thought. But if somebody had sold a put by end of the day, see, end of the day we sold at 8. Let me just bring the put price again. See, say we sold the put at 550, end of the day we remained at about 550. Now obviously with little bit of say the time decay and little bit of the VIX dropping, say you sold at 550 and by end of the day you just had about 400 or so, definitely the premium would have dropped. So the difference is 100 and you would have made a profit of 2,500 into 25. So we would have made this profit of 2,500. So overall we would have been in profit. Now out of the 3 budgets that we saw, I'm going to use a plain screen to just explain one thing. See, out of the 3 budgets that we saw, one, it went up and fell and never recovered. The second budget, 2021, this was 2020. In 21, what happened is we had a one-way move. In 2022, we went up, came down and went up. See, if we get this type of a budget move, we will make money. If we get this type of a budget move, we will make money. If we get this type of a budget move, we will lose money, right? The example is there. So what is the kind of strategy that we can deploy is wait. Now say the market opens at about 9:15, right? The market opens at about 9:15. Sorry for the handwriting. Wait until the budget speech is over. This is just my view. This can go horribly wrong, but this is just for information's sake. What I would prefer doing this budget. Wait until the budget speech is done. Say at about 10, whatever time, right? You will come to know in the news when the budget speech is about to get over, about 10:15 or 11, whatever time. So when the budget speech is about to end, okay, at that point I would prefer buying a call and buying a put, buy a call and buy a put, okay, wherever the budget speech ends. Now say if this is 11, at 11 o'clock buy a call and buy a put, one lot, or depending on whatever the lot size is. Definitely after the budget speech, as we saw the previous examples, right, there will be some swing moves. Now just assume after the budget speech the market shot up on the upside, right? At any point where you see profit with your call and put together, you see profit. If the call is making huge profit, exit both the positions. The moment you are in profit, you are making some money, exit. If after the budget speech the market crashes, say we get one violent move like how we saw here in 2022, it is 2022 February, yeah. Say after the budget speech you got this type of a move, you are in profit, close the trade. The moment you see profit, see, obviously as soon as we enter we are going to see some loss, okay? As soon as we enter we are going to see some loss. The moment you see profit, when this wild move comes, exit the trade, right? Just exit the trade and be done with trading. You wait. Not every time the market will continue to fall. If you get a bounce this way, so basically on close to close basis on this day we ended flat. That's why the option sellers made money, right? So once you get this big move and you are in profit, if you are profit in the second candle itself, 5,000, 6,000 for one lot, example, 10,000 profit, 5,000, 6,000 exit, be done for the day. If your lot size is more, with whatever profit, exit, be done for the day, right? If we do that, maybe definitely we will be profitable. Or if somebody can predict the top of the market, we can sell, because selling will be beautiful on the budget day. If you get the view right, we can make a lot of money. We saw that when the market goes flat, we did make some money, right? So I did this for a couple of more budgets, and that's how I came up with this plan. Obviously it will be a very lengthy video if we cover a lot of budgets in this way of a practical checking what we could have done. So just to reiterate, what is the best plan for the budget day, okay, for option buying is wait until the budget speech is done, okay, wait until the budget speech is done. When the budget speech is going to get over, buy a call and buy a put. If after the budget speech you get a quick move on the upside or a quick move on the downside, if our PNL is in plus, exit the trade. If you see a lot of, the PNL will be fluctuating because you're buying a call and a put, okay. If nothing is happening, the trade is going in loss, exit and just be done for the day. Now what happens on this budget? The other thing is the India VIX, right, will be at a pretty high level. Now an option premium, as you saw, sometimes it would have even shot up to 800. Okay, now you buy an put at 800 and after the budget this VIX falls suddenly. Okay, the VIX will drastically drop and this put price, now even though the market is falling, the put price from 850, even though the market is falling, it will keep reducing. So it will be difficult. The PNL is going to like change and fluctuate a lot. It is going to be difficult. But what is the best I could think of is this: at the end of the speech, towards the end of the speech, buy a call and a put and make use of the CPR levels, right, to determine if where we are at the market. Now going back to the example of 2021, 2022. Use the CPR levels because a lot of time the CPR levels does work even on the budget day, though it is difficult. Some of the now say if somebody a move similar to this comes in this upcoming budget, we took a short here. At this point, when we hit this S1 of CPR, exit your trade. Right? It is difficult, but obviously everybody wants to trade on a budget day. If we want to trade, we can follow something like this. And the most important thing, the best thing to do on a budget day is don't take any trade and just relax, right? That is the best option. So that's it for this video. And just to reiterate a point, this video is not to encourage anybody to trade on the budget day. It is just to give you an overall view of what can happen. That's it, and thank you.